Hello, everybody. This is Troy. I'm a senior account manager with AvaTrade. I'll be leading the session today. Welcome to the fundamental analysis webinar. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone runs into any problems as we go along, please let me know. As always, keep in mind as we're going over the charts and ideas and information with strategy concepts that no one trade is guaranteed to bring profits. On each and every trade, you have risk that's involved. But also, the reason why we're here is that with each and every trade, you have a good potential for profits as well. So the idea is to manage your risk in a way that makes sense, using stop losses maybe or hedge positions, prepared to take a trade in the opposite direction of your primary move to cover yourself, or other ways of managing risk. One would be the AvaProtect feature that we have available on our WebTrader platform and the AvaTrade Go mobile app. It's something you wouldn't have seen anyplace else. It's unique to AvaTrade's offerings. So that's something we'll take a look at as well in terms of how to manage risk, maybe using AvaProtect. As we go over information, keep in mind that it's from an educational perspective and not to be taken as financial advisement. Now, real quick, what is fundamental analysis? For those of you who are new to things, I know we have a number of experienced traders that come to the webinars and also a number of brand new traders who really don't know much about trading or strategy. So bear with me if this is basic for you. We will get into the strategies on the charts. Fundamental analysis, what is it? It's basically looking at the news. It's looking at what are the headlines saying, what are the economic numbers maybe that have been released of late. And there are two basic types of fundamental analysis. One would be regular economic events, like you'd see on an economic announcement schedule. We'll take a quick look at one today. And the other type of fundamental news would be extraordinary economic events, like the vaccine production, like the Brexit negotiations, and many other headlines that pop up that are unpredictable in terms of what they'll be or when they'll be. And so you can prepare for unexpected, extraordinary fundamental news within your trading strategies, and also trade on the known economic news, fundamental news that we can take a look at as well. As we go along, please feel free to ask questions, give input. I'm happy to address questions directly and also share information that you might think is relevant. Now, as we take a look at AvaTrade's main website, you'll notice some things are available that can be helpful to your strategies in terms of trading. Now, AvaTrade Go, if we look at the trading platforms, AvaTrade Go is our custom-made mobile app. I alluded to the fact that it has AvaProtect as a risk management feature on it. And we'll look at the WebTrader here in a moment as the same features on our WebTrader platform. But you'll see AvaProtect. Basically, you pick a time period for protection against any losses during that time period. Any losses are added back, and it's for a small premium cost. Any profits you make are yours, and losses are covered for defined time periods. You also can program your take profit and stop loss, and when you do that, as I'll show you on the WebTrader, it calculates your exposure, potential loss to your stop loss, potential profit to your take profit price based on your trade size and the price you enter. So very nice features, easy to use, especially if you're a beginner. It makes it very simple to understand your exposure and your potential profits, and to set up pending orders as well, which is easier with the WebTrader platform and the AvaTrade Go app. So if we wanted to use the app, you download it by using these links from your app store. If you want to use the WebTrader platform, you just click log in here, and that'll take you to this platform, which is our WebTrader. Those of you who have been with AvaTrade for a while, maybe since before we had the WebTrader platform offered, If you don't have this platform show up when you log into your trading account, or I'm sorry, when you log in to your client area from our main website, ask your account manager or ask support. You can have the web trader applied to your account as well so that it's available. Now, what it does is it trades right over top of the MT4 or MT5 account that you've opened. So it's not a different account. It's the same account, just a different user interface. Anything you open, trades that you open here, they'll show on your MT4 platform or MT5 platform as well, and vice versa. But what's nice about this platform are the added features. So if I'm going to open an asset, maybe I bring up gold. I always use gold as an example. It's a very common asset that people are interested in right now. And let's say I'm buying on gold. So I open the order window, and you see the gold shield means AvaProtect is available. And you also see I can do stop loss, take profit. So let's pretend I wanted to do, I don't know, 10-ounce position. So I say, okay, 10 ounces. Tells me my lot size here. Again, good for beginners. Also convenient for experienced traders that it's calculating your margin requirement for you before you open the trade. So you know, okay, that's how much will go to margin from my free margin. If I open this trade, it's right here, converted to your account currency. Also stop loss. Let's say I'm buying on gold and I want my stop loss below 1850. Okay, so maybe I go here and I say stop loss 1849. Maybe I don't think it'll go below there, and if it does, then I would say, okay, take the loss maybe. And I look and I say, oh, it's 259 risk. And I look at my balance, which is about 2,000. I say, wow, that's more than 10% risk on my account. Maybe I decide that's too much. So I lower my trade size. As I change the trade size, you see it changes my possible risk. And so maybe I decide, okay, 5 ounces, $130 possible loss. Maybe I'm more comfortable with that. And then I move on and I program my take profit. Perhaps I think gold will go to 2,000. Okay. Now I take a look and I say, wow, it's like a 5-to-1 ratio here. About 5 times more potential profit to that take profit than what I'm risking. And maybe I'm happy with that, and now I execute my trade. Okay, so fully informed as to risk, potential profit, margin impact, everything before you place the trade. Very nice as a trade calculator, like I said, for experienced traders, and also especially for new traders to have all of this calculated for you in your order window. And by the way, the AvaTrade Go mobile app does the same thing. Now, maybe I say, you know what, for now, there's a lot of volatility with gold. Maybe I don't want to stop loss. Maybe because I think there's going to be a potential stimulus deal in the US. I understand the fundamental news situation. And by the end of this week, they're maybe going to pass a budget and sign a stimulus deal. And that causes inflation of the US dollar, which maybe drives gold up. But I think, what if they don't pass the deal? What if they argue like the two sides typically do in the US when they're trying to pass deals? Maybe I say, you know what, I'll put protection on it for 2 days, 1 hour, 3 hours. The cost of the protection's here. 6 hours, 1 day, 2 days. Maybe I say, okay, 2 days, only $63 cost, 2 days protection on gold. I easily could make a lot more than that cost, right? 2 days protection. And if it plunges and goes the wrong way, 100 ounces, I don't lose anything. When this 2 days ends, whatever the negative floating is gets added back to my account, and then I can put a stop loss after that and let the trade keep running. Okay, so you have options here on AvaTrade's web trader platform and with the AvaTrade Go app that you just don't have directly on the MT4 and MT5 platform. But again, these trades will show once you open them on those platforms. So it's unique to AvaTrade using our custom-made platform to be able to have these types of options when you open gold, silver, FX pairings. You've got AvaProtect and all of these other features on anything that you're trading on. By the way, some of you maybe get confused about pending orders, and we're going to get into some strategies here soon on the charts. But I wanted to show you real quick, if you're going to do a pending order with this platform, you only have to say execute when price hits. That's it. Put the price, You don't have to say whether it's a buy stop or a buy limit pending order. Pending orders, there are 4 types of pending orders: buy stop, buy limit, sell stop, sell limit. And if you're new to trading, and even for experienced traders, that gets confusing. Yeah, on the MT4 platform, as I'll show you in a little bit, when you're doing a pending order, you have to say, okay, if I'm buying from a higher price than it is now, then I have to tell the MT4 platform that it's a buy stop pending order. Or if I'm buying from a lower price than it is now with my pending order, I have to tell the platform it's a buy limit pending order, etc. It's more complicated on the MT4. On our platform here and on the web, or on the AvaTrade Go app, what you'll see is you just have to say whether you're buying or selling and tell it the price that you want the pending order to open at. Whether it's a higher price, lower price, doesn't matter. It'll make it the right type of pending order automatically. Okay, so another feature that's convenient to use for both new and experienced traders. TAPS, you said explain that again. Which part? Which part do you want me to explain again? We're going to move on here in a minute to some fundamental news and some strategies on the live charts. TAPS, if you'll let me know, what did you want explained again? We'll come back to it if I see you type something. So since this is a fundamental news webinar, you'd say, well, what good is the web trader for fundamental news? Let me show you. On all live accounts, Trading Central is activated completely for free. Okay. On demo accounts, you'll see the economic calendar, but only on the live accounts, the premium services that are there for free. You see Forex featured ideas, analyst views, market buzz, analyst views. These are signals here. Yeah, I'll show you the AvaProtect again here in a second. TAPS. All right, so these are signals for free. A lot of people pay for signal service providers. Here they are free. The technical analysis breakdown, the direction that the movement is expected to go, the technicals about it, the price levels, everything's here. Live signals, okay? That's the technical analysis. The fundamentals, since that's what we're talking about today, we could click on Market Buzz with Trading Central. And here it is. It'll load. It'll show you the biggest bubbles are the ones that are trending the most, that have the most news out there. Facebook, Pfizer, Twitter, Amazon, Microsoft. If I want to know, well, what's going on with Amazon? Well, I click on it. It pulls up the hundreds of articles, the most recent first. And if I want to see what's going on, I click on the article and expand it. And there's my fundamental news. Amazon is mentioned here. We could read the article and learn a bit about what specifically is happening with Amazon. Okay. You could spend 20 minutes just studying the latest on Amazon if that's what you wanted to trade on. Okay. The fundamental news is lined up for you through our Trading Central features, I should say, and specifically the Market Buzz feature. So all of that's available here on the web trader. Get your live accounts if you don't have them, so you can check out all the premium features to make up your mind how happy you are with us. I think you'll be satisfied. Now, if we take a look at the AvaProtect real quick, because we had some asking about how to use that again. So you bring up an asset, gold, silver, and FX pairings have AvaProtect. If you initiate it when you open the trade, you can pick what length of time you want the protection. If you're a scalper, you might do 1 hour, 3 hours, etc. What length of coverage do you want? For whatever the covered time period is, it tells you when it expires. Any profits are yours once you open the trade. Any losses are added back. Okay, that's what the protection does for you. Any losses during the covered time period. When the protection ends, if you have negative floating, that negative floating is added to your account. Trade keeps running. If you get stopped out during the covered time period and the trade already closed, whatever the negative was gets added back to your account. Okay, during that covered time period. And the premium cost is shown here for the coverage. Costs less for shorter time periods, costs more for longer time periods. That's it. The cost is a small fraction of what the potential profit could be. All right, so fundamentals, what's happening? Stimulus hopes boost stocks to record, Bitcoin soars. Okay, 2 different things going on there in that headline. Yes, the stimulus hopes in the US and other places in the world are boosting equities, stocks, indices, going to record highs. Eventually this momentum will die, right? It won't go forever, but that's what's driving the markets up right now. We see the volatility index is low. It's down over 2%. That's a sign that markets would be rising. The futures are green. So it's exactly what's happening. Markets are rising. They're in the green. Volatility is down. Fear is down over 2%. Dollar is weakening. Why is the US dollar index down so much? Because of the perceived stimulus that's coming out of the US. What happens to the strength of a currency if you print billions and billions of dollars and hand it out? What happens to the strength of the dollar? It weakens. And so that's what's been happening. Okay, they're causing hyperinflation of the USD. And so what happens with gold when there's fear of inflation? When money is so easy and markets are rising so quickly because of free money being handed out, that creates fear in terms of looking for safe havens. While volatility is down, gold is still rising because of the weakening of the USD, the inflation of the US dollar. Okay, and so that's what we've seen today. The fundamentals are there. We understand why it's happening. You could have been buying on gold since yesterday, since the beginning of the week when they started saying for sure, looks like US is going to pass a stimulus package, up went gold. Okay, so we'll take a look at the charts and look for possible opportunities based on understanding this relationship. Now, Bitcoin, why did Bitcoin go up? Same as gold. Bitcoin is a nationless asset like gold. It's not affected by individual jobs numbers in a specific country. Bitcoin is decentralized like gold is. So many view it as a potential safe haven as the US dollar is weakening. Potential safe haven, Bitcoin. Up it went, over 23,000. New record high for Bitcoin. And maybe gold is going to try and do the same thing in terms of record highs. We'll see. Dollar slumps to multi-year lows. We just talked about why. Stimulus, right? Stimulus package. The Fed in the US, they're talking, was dovish. Dovish is the opposite of hawkish. Hawkish is if the Feds came out and said, boy, we really think the economy's doing strong, maybe we can raise interest rates back up. That's not what they said. They were not hawkish. They were dovish. They came out and said yesterday, and probably more today, as they're talking about economic policy in the US, they said, boy, things don't look good with the pandemic. They said, wow, we think we'll keep interest rates near zero until 2023. This is how they came out and talked, and no wonder the USD plummeted further, right? If you're a USD South African Rand trader, USD ZAR, boy, is it an opportunistic entry point if you think eventually here the US dollar will strengthen again. We'll look at the chart on the USD ZAR and some other USD related assets. The US dollar is at, like it says here, multi-year lows against many, many other currencies. Fed vows to buy bonds until it sees substantial economic progress. So it's funny, the stock market's going to all-time highs, but the Fed doesn't think there's economic progress. It's because it's artificially driven, right? Because of trillions of dollars of stimulus handed out in the US over the past months, and another trillion may be coming. The businesses, the stock market loves that, right? Investors love that. It's why stocks have been going up so much, but that's not a sign of economic strength when you have to hand out trillions in stimulus to keep the economy going. So up goes gold, right, as it's been, and it's a setup for a potential market pullback, right? So because the Fed understands that in the US, they said, we're going to keep buying bonds, we're going to keep interest rates low, they're going to prop up the economy more. So no crash yet, right? Not just yet anyways. This caused a little pullback today in oil and some other assets. Lawmakers are arguing a bit about how much relief there should be. They've actually been arguing since before the presidential election in the US about how much stimulus there should be. And they've been using it as a political weapon, the left against the right and the right against the left, rather than just passing something that is common sense. So now they're talking about breaking down the stimulus into two separate bills, one to fund the government and the other for the stimulus package related to COVID problems. And so there could be bickering still today, which could cause a pullback in the markets. I think eventually they're going to pass the bill, which will cause more positive momentum. But as politicians do, they're grandstanding. And so you will see probably more bickering before they pass this thing. That's my prediction. No guarantee, but that's my prediction. Economic announcements. This is the other type of fundamental news. We've been looking at this. This was the type of fundamental news in the headlines that we said is kind of unexpected. You don't know what headline will break next. Now we look at the scheduled economic news. Nothing exciting. Came in flat. Everything came in as expected on the economic schedule, except one announcement. So pretty flat. The focus really could be on the GBP here, as there are some large announcements coming in within the hour. Bank of England interest rate decision, big deal here coming out of Great Britain in about 37 minutes. So we could see some huge movement on the pound very soon. Okay, so let's take a look at some assets that are related to this. And I pulled up this headline. The Republicans in the US are urging Trump not to sign the funding bill because they think it's too big. The Republicans typically don't like handing out free money, and the Democrats love handing out free money. And so this is causing some stress right now today. And that's what I was saying. You could see more bickering before you see positivity moving forward on that stimulus package, which creates some pullback opportunities, potential opportunities anyways. So let's take a look at some assets that are related to what's going on. This is crude oil. We're on weekly candles on crude oil. There's the support level, right? From months ago. Crude oil was up here on 1 week candles. The price hit and went up. The price hit and went up. The price hit and went up. These are 1 week candles, folks. So this support level held for a long, long time, going back into 2018, okay, all the way through until this was the pandemic oversupply of oil market crash right here. This is where oil crashed. And look where it almost returned to today. Almost back to the pre-pandemic, pre-oil plunge from earlier this year. Almost back to those levels. So if we take a look, I'm not so sure about Rolls-Royce in the UK. Good question. If you have some details on that, please share. If we're looking at oil, look what happened here. Oil came all the way back up to this resistance. If you think there could be any type of pullback in the market right now, look at the opportunity with oil. Oil's been in oversupply. The OPEC nations have been bickering a little bit about maybe they're going to raise production again soon. They agreed to hold off for the time being, but if any OPEC nation or Russia says they're going to increase production, look at what oil could do to pull back down. If there's more fear about the pandemic spreading, the vaccines are great, but they're going to take months to distribute. New York, other places, California, other countries, talking about completely shutting down economies again. So oil could be driven off this resistance level. That is one heck of a old support level that stood for 2 years that could now stop maybe the momentum of oil's climb here. So what could be an easy move on oil right now, just from the technicals and from the potential unexpected bad news that could come to reverse the markets, fundamentally speaking, then what we would talk about is shorting oil. So if I say new order, maybe I do, I don't know, 100 barrels on oil. 0.1, take the trade size that makes sense to you for your balance, your risk tolerance, and maybe I sell on oil. Okay, great. So now I'm shorting oil. Where might I put my stop loss? Any ideas of where your stop loss might go on a move like this? Above what level? Here's the old support level. It took a lot of momentum to break it, so it would take a lot of momentum to break back above it, right? So stop loss would make sense just above this resistance level, the old support level. If it breaks through here, then potentially it climbs further. So you have to understand there's a risk you'd lose, right? So you want to cover your risk in some way that makes sense. So maybe you put your stop loss just above that resistance, maybe 51.5 or something, 50.5. Okay. So everyone would be a little different how patient you want to be. 50.5, 51.5, 51, something just above the resistance. Your potential profit, you could do a take profit at the first support level right there, right? This would be the support level right here. The old resistance here that it broke above. So potential profit down to, let's say, 43.75. Let's put a take profit 43.75. Get on the right side of the decimal with my 7.5. And stop loss, I see different suggestions. Maybe we go 51.5. Okay, there we are. So my risk is about, I don't know, 35, 40% of my potential profit. If I was going with a stop loss at 50.5, which is still above, now I'm kind of 2-to-1 potential profit to risk. Okay, it depends how you want to set that up. If it goes up, hits your stop loss, you could prepare a pending order, then back down below 50 to sell if it drops down again, right? You can take more than one shot at this. Now your take profit also, you can think about where you'd want it. Maybe your take profit you put down here at this support level. That if the market turns, maybe you expect that it would come at least to the second support level. I think more likely to come to this support level here. Okay, look, we're already up 73 cents. We were a second ago. Okay, so now we can zoom in off the 1 week candles and look a little closer. And you see on the 1 hour candles, 4 hour candles, here's our take profit. That's quite a ways down, right? That's a nice little move if it comes there. And that's the first major support level. Maybe I look over here and I see this little support here. And I say, let me cheat this up just a little. By zooming in on the smaller candles, now I zero in on the exact spot where that support level is, right there. And so if this comes down to that price, maybe that's the spot I would take my profit. And when I go to 1 day candles, 1 week, now I see my stop loss is just above that major resistance level. 2-to-1 potential profit to risk. Okay, how about gold? What's happening with gold? The order that we just simulated here was a sell. It was a market sell, not a sell limit. It was a market sell. A sell limit would be if somewhere higher than the current price, you put a pending order to sell if it goes up, let's say to 50 or 49. Maybe you think it'll hit 49 before the big drop comes. So you do a pending order to sell from 49. That would be a sell limit, programming it to sell from a higher price than it is now. Good question. I like the resistance level that it's pretty much met it, and any fear in the markets could drive oil down now. We see it's trying to drop. We're up a couple dollars, right? Okay, so gold. Let's take a look at what's happening. 1 day candles. You see this week, gold went up, 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 up. A lot of traders were buying off this support level down here. 1 day candles, support. It hit here up, it hit up, it hit up, it hit up, it hit way up, right? Now gold broke this resistance level here. It already broke this resistance. It's above it. So if gold's pulling back temporarily, this price level here, 1874, is a support level. So we go to 1 minute candles and we say, here's 1874. It's right here. Okay, that's the first support level that we saw in the 1-day candles. It's a major support level. So if gold pulls down to 1874.5, maybe that's a spot you want to buy. So why would you buy on gold? Stimulus in the US, weakening the USD, causing inflation fears. And so that tends to drive gold up, right? You could be wrong. We're not guaranteed to win, so you put a stop loss that makes sense. But the fundamentals tell you if gold pulls down, that could be an opportunistic spot to buy. So buy limit, buying from a smaller or from a lower price. So if I program this for 1874.5, stop loss just below that support, maybe down here, 18, maybe we'll go below this support. So we get below 1, 2 support levels. So 1871, okay, for a stop loss as an example, 1871. Take profit, maybe you leave the take profit open. It could run for a while if it goes the right way, right? So then we go 1 hour candles and we look and we say, okay, if it comes to this little support level, we're buying. Stop loss is just right down here below that support level. Potential profit would be huge if it keeps climbing to the all-time high, right? There's no guarantee it will, but this is a spot where you could get in with a pending order. That's a buy limit pending order. What if you say, yeah, but it could just climb now? It could just keep going up. Well, then you do a market move, right? That's up to each individual trader, the patience you have or don't have. You could buy right now. Maybe I say I want to buy on gold with one move, a market move. And if it drops, I'll buy more from a lower point. So I'm in either way. I'm in more if it pulls down, and I'll put the stop loss for both of them at the same spot. That's like a compromise. Do half of your trade size now, do half of it if it goes to a better price. And then your stop loss is below 1 support level, 2 support levels before you give up on it. It would have to break 2 support levels. Okay, so in that case, then I need to put a stop loss here on gold, 1870.46. If I want to match the other one, 1870.46. Okay, so there we are. We're in with a market move. We'll get in more with a pending order if the price goes the wrong way a bit. Okay, just as an example, and that's going with the fundamental news. Now, there could be a pullback, right? If there's any problem with this bill, the stimulus bill out of the US, if that causes fear, you could see the US dollar strengthen and gold pull back down, in which case you'd have to look for re-entry points. Expect that could happen, okay? Could happen. So you have to be ready. If you take a small loss to your stop loss and it pushes down, be ready for a re-entry again. If you believe eventually gold will go up in this example. And your re-entry, you could program now. You could put another buy limit pending order here. And you could put another buy limit pending order here, like a staircase at each support level. If it gets to this support level, you buy again. If it breaks it, hits your stop loss, gets to the next support level, you buy again. All the while, small risk, much larger potential profit if it goes the way ultimately that you might think it does or will. Yeah, exactly. Baggio, that's the best situation, right? Take the fundamental news as you know it, as you believe, so you know which way the wind is blowing, so to speak, and then you use the chart for breakthrough moves or pullbacks for proper entry points with your technical analysis, but only in the direction you believe ultimately it should go. Okay, so if gold goes up and breaks this spot here, breaks above this spot, you could have a buy stop pending order here, ready to buy from a higher point. Why would you buy from a higher point? Because it broke the resistance, meaning it has momentum. In which case, if it broke this resistance, a buy stop would buy from this price, and you could have your take profit at the next price level, at the next resistance level. These movements tend to move like staircases, like steps. Once there's enough momentum to break one price level, many times it will carry to the next price level. Not always, but many times. Okay, good point, Baccio. Okay, so I promised USD South African Rand. Let's take a look at it. Where is it? There's the Euro ZAR. Here's another way to do it. USD South African Rand. It's hiding on me. Apologies. We'll find it here in a second. Here, this is an easy way. Do hide all. Good trick. Hide all. Then you go symbols. Then you go to where you find the asset. There it is. Now you click show. Now we have it. And there we go. Okay, so now we take a look at USD ZAR. And if we go to 1 week candles, look at this. Why did the US dollar drop so much against the South African Rand, which has not been really strong per se in general because the South African economy hasn't been great. But the USD has weakened a ton against the Rand after reaching quite a high up here near 19.5. Okay, pulled all the way down below 15 now. So you've got an opportunity to time a potential buy position when you think the market might turn. Now, when they pass the stimulus, you might see the USD weaken further. And so if the US dollar drops to the next support level, you could be looking to buy off of a major support level down here. Okay, so what kind of pending order could you prepare in case the price drops to a price that you would want to buy from? That would be a buy limit pending order to prepare to buy from somewhere above a major support level that you maybe think it won't break. Okay, so this is a future opportunity as they pass the US stimulus that you might see the USD push down further to a support level that maybe you think won't break. This support level has been there since 2019, November. Okay, so over a year. So if it pushes down here, maybe that's a spot you like. Okay, Charles, I'm reading your question. Okay, you'd like to look at GBP Swiss franc in relation to the US dollar index. Okay, so just in general about that, the Swiss franc tends to be a safe haven currency, right? Markets are rising really high lately, and that means that there wasn't a lot of fear. So maybe the pound has gained some ground against the Swiss franc. Let's maybe I'll just load all, show all, and let's find GBP Swiss franc. Okay, and we look at the 1 week candles, and just as I suspected, the pound is way up against the Swiss franc. Why? Because of market optimism, because of stimulus. So the Swiss franc has been weakening as the markets have been rising, right? And so then we say, well, what happens if some fear hits the market? Then the Swiss franc would strengthen as a safe haven currency, right? So we have to look and say, where's the resistance level for this asset, technically speaking? And also, you're asking how does that relate to the US dollar index? Well, the US dollar tends to weaken when there's market optimism and strengthen when there's fear. So US dollar is really low. Makes sense that the Swiss franc also weakened. Low fear on the market, weakening USD, weakening Swiss franc. If you expect or see the US dollar index start to strengthen rapidly, you could maybe expect also that the Swiss franc would strengthen, because both would be driven by fear in the market to strengthen, in which case the pound would pull down. Now, there's optimism about a Brexit deal out of Great Britain, so the pound could keep rising. And so the technical analysis shows that the price is currently right at a resistance level. If you look at the top of these wicks right here, it's there. Look at this wick hit here and drop. This was back in June 21st this year. So resistance down, another attempt down, another attempt down. It broke once and then went back below. And now we're at that level where it's broken above a couple times, and each time it broke above, look how far it went above. It broke above this current price level here, and it went way up here. It broke above this price level here and went way up again. So it's at a decision point. Is it going to break the resistance and run up, or is it going to pull back? And it all depends on what happens with Brexit, right? So I see two opportunities. Pending order up here to buy if the pound breaks through. Also, if you look at the smaller candles, if you start to see a downtrend on, say, 5-minute, 15-minute candles, if you see it start to downtrend, you could short the GBP Swiss franc. But you've got this Brexit deal negotiation going on, and any shorts could really be hurt. If they pass a deal that excites people, you might see this resistance break, which is why this buy stop pending order makes maybe a lot of sense right now, fundamentally speaking. If a Brexit deal comes through that the world likes, not just Great Britain, you could see the Swiss franc weaken rapidly and the pound break through this resistance and run up, in which case you could be looking at a take profit somewhere up here at the next major resistance level. So a buy stop pending order up here fundamentally and technically seems to make sense right at that spot. Charles, are you with me on that? So the 1 week and 1 day candles show us that we're exactly on a major resistance level with this instrument. And so if it breaks, boy, it could break, right? So I like the buy stop pending order up there. You see, it's not a coincidence that this bull run slowed right exactly at this line, which is the resistance level going back to earlier this year. Okay, so a scalper, you could just short this just because it's a resistance level, right? Sell, put your stop loss right above it. Maybe it pulls back, you get a quick profit. Okay, that's an easy scalp type move. It's responding to that resistance level. You could get a quick profit, maybe down to the first support level. The longer term move is this one, the buy stop that could break through and really run all the way up. Okay, so short term market move now, maybe sell is the move. Longer term breakthrough, buy stop could be the move. That's what we see fundamentally, technically, and then we hope we're right, of course. But managing your risk so that your potential profits are much nicer than the risk. All right, good. I think this is a good place to stop. We've been going for about 45 minutes. Thank you for joining. I think there's some big opportunities for market pullbacks like we're seeing on oil here. I mean, look at the pullback on oil. It's come down quite a bit and has the potential to pull back further if there's any snags in that negotiation today. And we could also look at major indices like the S&P 500. Looks like it's ready to maybe pull back temporarily. We see the resistance forming up here after a large run up. NASDAQ looks the same way. Ran out of steam for the time being. So scalpers, you could be shorting this potentially with very small risk if you put your stop loss above the highs. Longer term, if they pass the stimulus, you could see a breakthrough of the high and a longer run in the opposite direction. Have an eye on Bitcoin also. Bitcoin went to a new high today, 23,000 plus. So maybe take a look at that too. You could see some opportunities with Bitcoin with some big movements. All right, everybody. Bye for now. Thanks for joining.